over, Wyckoff concepts in this market here and try to explain what's going on. What happened was you had this selling wave on 307 volume. So obviously everybody's in a bearish frame of mind. It came from 182 and all of that, and it went down in heavy volume. So what happened after that? Well, after the 307 volume, you had 128 volume. Okay. You had 149 volume. Okay. So is it possible that this volume was reaccumulated in these smaller buying waves? It's possible, but when I'm looking at this, it's pretty clear I want to take the short until this happens, where you have a attempt to break 307. It needs to be proved. Anytime you have a volume wave up or down, it needs to be proved by a lower low or a higher high. In this case, it's a down volume wave, so it needs to be proved by a lower low. And that lower low didn't come in. In fact, what happened was there was an up wave with higher volume. That's your first red flag. Are you bullish? No, because this is still in the background, right? So let them try again. So the bears tried again, and it came down only to test this area, which is this is the low bar of this move, and it tested it, and it came up on 107 volume. So it tried to break once, it tried to break twice, and instead volume came in, and there's a breakout of this buying wave. Remember, the buying and selling waves are confirmed after there's a breakout. Alright, otherwise the high volume by itself is meaningless. So what we know is that this area has its breakout. Now, why is this breakout important, and how do you know it's legit? All that. Well, first you have the buying waves and all that, and then it's a thrust. It's a thrust. Breakouts need to have a thrust. Alright? They need to have volume in the background and a thrust. All breakouts, in my opinion, require thrust and volume in the background. Otherwise, I don't think they're legit. And the key here, this thrust came in with a follow-through bar. It's this condition that puts the probability on probability of direction with a long bias. So you have all of this action, and finally you have a breakout and you have a thrust. Now people are still going to be scared because they think that this is a resistance area. So would I take this? No, I wouldn't. I'm also going to think this is a resistance area. This is where the heavy selling came in. This is exactly the area that was tested. So from a bearish perspective, this is a retest of a breakdown, and that's where the bears are supposed to strike. To defend their position from where it was initiated. This selling wave was initiated here, so if they're bears, they need to defend that area. And what happened was there was a pullback, but it really didn't make any progress. It's just a pullback in this wave. It's an A, B, C pullback, and this market goes right back. Now you look at the volume on the pullback is 91. The volume here is 94. Again, red flag, just like 144, 145, 149, 91, 94. What is the 94 telling you? It's telling you it's reaccumulated. So whatever pressure came in, bought right up. So now you have all of this action, and you're thinking, is it bearish or is it bullish? Is it bearish? I have evidence on the bull side. There's even a big base here. It's bearish because it hit resistance. Now it comes up on 94, so it's like you're weighing two sides. It's like two melons. It's like which one's heavier? And what happens is it pulls back and then goes higher. It is at this point that you know with high probability that the bulls are totally in control. This pullback had only 5 volume. There is no selling pressure here. There's no selling pressure here. Effort here was reaccumulated. Pullback is nothing there, and it's going higher. At this point, it sets up the trade. Okay. Why? Low volume with follow through, and more importantly for me, it gives you an ideal place to put the stop. You see how this bar, they tried to go down, but it closed high end and had follow through? The attempt to try to go down and fail and close high end is bullish. The fact that the attempt before it did not produce anything, and the action after it was a higher high. So the bulls proved themselves here. The combination of reaccumulating the effort of 91, pulling back and not able to, trying again, not able to, closing high end and having follow through with a higher high, tells you you can long this area with a stop under here. Why? The bulls proved themselves to defend that area. This is where it was tagged, and this is where the uptrend continued. It continued until you had a buying climax. The buying climax is right here. How do you know it's a buying climax? You really don't know until the low is taken out. The low was taken out with high volume, which is its first distribution wave. How do you know it's a distribution wave? Look at the number of bars. 1, 2, 3, 4, 5 bars. Look at the length. It's big. Look at how many lows it's taken out. 1, 2, 3, 4, 5 lows. That's a strong selling wave. Look at the volume on it. So this is selling pressure. What happens after that, you have a pullback. It goes right to the test of the breakdown, the ice area. And then it tests twice. On the second test, there is a lack of demand, and then there's a thrust. Now, according to the Wyckoff method, you would call this a sign of weakness. And that 28 over here is called the LPSY. So if you're looking at it, according to those strict conditions, for me it's just the supply, lack of demand, and the thrust. This thrust takes out the low of the high volume. As I explained before, high volume is proved by a breakout over it. 149 doesn't mean jack until there's a breakout thrust above it. 139 doesn't mean jack until there's a breakout thrust below it. When it's able to make progress like that, legit, it's not going to work all the time, but I think the probabilities, in my opinion, are in your favor because the market is proving itself. Its ability to go pull back is minuscule, and its ability to continue in that direction of high volume is proven. It has the breakout thrust and it has follow through. It has the breakout thrust and it has follow through. Above the wave, breakout thrust, follow through, breakout thrust, follow through. So now it only comes a question of where you're going to put the trade. For me, I would put it against this area right here. Unfortunately, it doesn't go to it because there's effort to try, but they couldn't do it, and it continues down. So you don't get this trade, you get the next one. It's just the way it is. A trade is not a trade unless it has minimum risk. Alright? A trade is not a trade. A trade without minimum risk is not a trade. So over here it wasn't a trade. It came up, but it couldn't give me that, and it continued. The other approach that many people do is after the markup or markdown bar with follow through, they'll sell the close of the first bar. That's fine also. But okay, so this is the trend. This is where it ends, and this is where the downtrend begins. Markdown is here. After the markdown bar, markup is, I would say, right around here. After the breakout. Here, but for better labeling, I'm going to place it here, markup and markdown. And you have to understand the concept of markup and markdown. It happens all the time. It happens intraday, it happens on daily, weekly, it happens on different charts. But this is very, very important to understand that the typical cycle has accumulation, then markup, then distribution, and then markdown. What do you have here? You have that wave of accumulation or reaccumulation, then you have markup, then you have distribution. This is the distribution wave. Then you have markdown. So now you can really see the cycle and how it works. Now I'm done. Thanks.